Welcome back to another episode of Market News. I'm your host, and today is July 22, 2026. This is a big day, folks. The headline story, right out of the gate, is an AI and semiconductor story that has rippled through nearly every corner of the market. Let us start where the action is. Supermicro Computer disclosed $60 billion in new orders alongside a massive margin beat. That is not a typo. 60 billion. In a single disclosure, Supermicro just became the centerpiece of the AI infrastructure trade. And the theme did not stop there. TSMC raised its US investment by $100 billion. AMD was set to supply its MI450 GPUs to Anthropic. Apple planned a major MacBook and iMac overhaul to capitalize on what analysts are calling AI-fueled demand for high-performance devices. NVIDIA was referenced across nearly every AI-related headline, reinforcing its central role in this narrative. This is, in many ways, the story of the market right now. AI is the engine, and semiconductors are the road on which everything travels. Now, if you look broader at the tech earnings picture, Barron's.com framed today's earnings season as a test for a fragile stock market. The stocks they highlighted to watch: ServiceNow, GE Vernova, Supermicro, and Danaher with its mixed Q2 results. These are the names that could define the next leg for the broader indices. ServiceNow, in particular, is drawing analyst attention. Multiple outlets are predicting that if ServiceNow delivers on its AI metrics around its earnings, the stock could soar. The ticker now was flagged alongside NVDA, PLTR, and CRM by analysts looking at whether this enterprise AI software story has more runway. On the earnings front, there were a few other standouts. AT&T beat expectations, and notably, CEO Stankey said that Starlink deals were not needed at all. That is a direct signal that AT&T does not see satellite broadband from SpaceX as an existential threat to its wireline business, and that is a message the market absorbed. Meanwhile, Walmart was seen delivering softer Q2 results, with RBC highlighting that lower-income shoppers remain pressures. That consumer pressure story is important for anyone watching the broader macro picture, because it suggests the strength in the upper income bracket does not tell the full story about American consumer health. And then there is Netflix. Wall Street pushed the company to explain its trajectory. What are viewers doing? What are advertisers seeing? The ticker NFLX landed alongside Apple, WBD, CMXA, Amazon, and DIS on analysts' watchlists, because this is not just about Netflix anymore. It is about the entire streaming and media ecosystem trying to figure out where growth lies in a space that has gone through multiple investment cycles. On the consumer front, OpenAI's proposed $75 billion AI spending plan drew serious debate. The question was whether this was visionary or financially reckless. Tickers Amazon and Meta came up in this conversation because a lot of that spending is going to be directed at infrastructure players, and the market is trying to price in what that kind of capital commitment means for the entire AI supply chain. Now let us talk about the macro and geopolitical risk side, because it is impossible to ignore. Trump threatened retaliation over attacks in the Strait of Hormuz, and oil prices jumped. Hult Group, the homebuilder, issued a warning that rising oil costs could make housing more expensive. The ticker PHM appeared alongside ITB, DHI, BCH, and even BRKB as analysts looked at the downstream effects on housing affordability. And the ECB was expected to hold rates steady despite Iran inflation fears, with crude futures as the key ticker to watch. So you have this tension between geopolitical oil risk and a central bank that sees no reason to move right now. That is a delicate balance, and it matters for everything from mortgage rates to consumer confidence. On the automotive and energy side, Tesla reported some good news. The company beat Wall Street delivery estimates by nearly 74,000 vehicles under Elon Musk. That is a solid print. But France said Tesla's full self-driving fell short of safety bars, which is an important regulatory note for anyone tracking the autonomous driving thesis. And beyond Q2 deliveries, investors were focused on the broader earnings picture around Tesla, with analysts looking beyond the numbers to where the company is headed in terms of margin, software revenue, and the energy storage business. A few more corporate moves worth noting. Microsoft announced that Xbox was adding PC and handheld support for classic titles, a platform expansion story for MSFD. Meta appointed a new Chief Information Security Officer, Asaf Karen, while facing concerns from Oppenheimer about higher AI spending combined with slower ad growth. So Meta is in the hot seat on multiple fronts: its cost structure for AI, its advertising business, and now its leadership transition in cybersecurity. Samsung launched new, more expensive foldable smartphones, a reminder that even in a competitive smartphone market, there is room for premium innovation. And in a more cultural note, the Cinerama Dome, an iconic Hollywood theater shuttered by the pandemic, announced its reopening. Sometimes the market needs a break from the hard numbers, and that is a nice one. Quantitatively, the numbers tell an interesting story. The quantitative model flagged 13 bullish signals against 37 bearish across 10,598 analyzed symbols. That is a heavy bearish skew. Notable gainers included CFI, which surged nearly 790%, and MSS, up 464%, and UTS, up about 89%. On the loser side, ZIBT dropped 64%, CLBK fell 55%, and BBLGW lost 45%. High-volume names on the list included Juns with 352 million shares traded, OMH with 305 million, and Verizon, or ticker T, with 140 million on earnings buzz. What this pattern tells you is that in a market with broadly bearish signals, the movers are coming from small or mid-cap names that are making outsized moves on earnings or news catalysts, rather than from the mega caps that tend to drive the indices. And on the indices themselves, U.S. markets saw modest gains. The Dow climbed even as oil jumped, and the TSX Composite rose 190 points at midday. So despite the geopolitical headwinds around the Strait of Hormuz, the indices pressed higher. That is resilience, though it is worth noting that this is not a blanket rally. AI and semiconductors are powering this, while the broader market is being weighed down by the persistent macro risk and the heavy bearish signal count. Qualcomm was also in the news, with analysis suggesting Qualcomm looked below fair value on earnings yet near fair value on cash flow, a split view that some investors are interpreting as a signal of undervaluation. And Reddit stock slid after reports it could limit Google's AI access, which is a fascinating story about the negotiation between content platforms and AI companies over training data. Tickers Google, Goog, and RBDT all moved as the market digested what this means for the AI data ecosystem. So let me pull this together. Today's market is defined by three overlapping themes. First, the AI and semiconductor infrastructure build-out is accelerating at a pace that is catching even seasoned analysts off guard. $60 billion in orders for Supermicro, $100 billion in TSMC US investment, AMD supplying GPUs to Anthropic, Apple overhauling its product line. Second, macro risk is rising, with oil prices, geopolitical tension in the Strait of Hormuz, housing affordability concerns from Pult Group, and the ECB holding steady despite inflation fears. And third, earnings season is the battleground. ServiceNow, GE Vernova, Danaher, AT&T, these names are explaining where the market is and where it might be going. The quantitative signals suggest caution. 13 bullish versus 37 bearish across more than 10,000 symbols is not a picture of broad market optimism. But the indices are climbing. The Dow is higher. The TSX is up 190 points. And the AI trade is running hot. That is the puzzle the market is trying to solve today. Can you have an AI-fueled rally in a macro environment with headwinds like elevated oil, geopolitical risk, and softness among lower-income consumers? The answer to that question will likely define the rest of this quarter. That wraps today's market news. Thanks for listening, and we will see you tomorrow.